Hi there, Serial Trader here. Gonna have a checkup on the major US indices. After yesterday's video, I was looking for some sort of reversal signal, and today may very well have been that signal. So I'll just briefly glance here. So we may have completed this blue wave C of wave 2, okay? And if that's the case, tomorrow should be a down day. And of course, well, let me just switch this over. So from a candlestick perspective, let me zoom right in here. Today was a doji day, so you had a very small real body and a long upper and lower shadow, and we're still just stuck right in that 61.8% retracement zone. And in fact, we closed at 2708.64, and the actual 618 retracement is 2707.67. So, you know, within a tick of that actual 618 retracement on a closing basis. So, Doji Star, and let me just go over to the other chart here. Doji Star in the overbought condition. That's a potential reversal signal. Now it's aggressive to actually take a position without that doji confirming by trading lower tomorrow. But in this case, I feel the aggression is warranted, and I feel a little more comfortable being aggressive because we have this price gap, okay? This price gap right here. And that was just from yesterday's action that gapped up. So at the very minimum, I would be quite confident that sooner rather than later, SPX can come down, at least test or close that gap. And to close the gap, it would trade down to 2686.49. Okay, so at a bare minimum, you should come down and close that gap. Now, I'm thinking it's likely we go well beyond that and actually start trending down, and likely take out this low. And then maybe even thinking about taking out that February low, but one step at a time, one day at a time. So what did I actually do? I'll show you what I did. And let's put it in here. Okay. Let's take off some of these other things I have on the go. They just want to show today. Okay. So I bought 100 SPY put contracts, 273 strike price, May 18th expiration, at a net debit of 470 per share per contract. So it was an aggressive position. That's like $47,000 worth of puts, and they only expire 30 days from now. So I'm obviously looking for a quick move down. And okay, so if we just come down to close that gap, oh, that would bring us to say 264 on SPY, something like that. Well, actually, I'll just go check that SPY chart real quick, because it can be slightly different from its numerical equivalent on SPX. Okay, to close the gap on SPY, you'd be looking at 268.2. Okay. So if we just go down and close that gap, 268.2, that'll be a nice $16,000 profit or so. And if we go beyond that, so if we actually go and, let's say we go and tap that low that we made earlier in, what date was that? April 2nd, okay. So basically the low at the beginning of the month, we go and tap that. And that comes in at 254.67. So if we go hit 254, oh, where does that put this position? Oh, $137,000 in profit. So, you know, one day at a time, one step at a time, but even just a nice little gap closure. And if it looks like that's all it's going to do, I'll just close the position there. But if it just keeps going, and let's go back to the other chart. if it just keeps going and gets below this trend line, I'll start being more confident that I should hang on to those for a little while longer. Maybe take some follow-up action, maybe roll them down, or sell some lower strike puts against them. I'll make that decision at the time, depending on how the market looks. But if we just start really free falling, like I'm kind of hoping we will, or anticipating we will, I'd be inclined just to hold them until I basically, chicken out and take my profits. Because I'd rather sell too early than too late. That's always the case. I'll just get rid of that gap there. So that's how I'm playing. This is a little more aggressive than I would normally do, but I just think this is a really good setup. And I do like how we're overbought here on this oscillator, and it's just been so reliable since that January peak, as far as highs and lows of the market being graphically depicted by it. I'm liking the doji star reversal. I'm liking the low volume we've been seeing on this rally. I'm liking this Fibonacci area that we're encountering here. I'm just liking it all. And that's why I went a little more aggressive. So that's SPX. Quick check in on the Dow. And let's have a look. So the Dow had a down day, not an actual candlestick signal though, just a negative day. It's overbought as well. And as far as retracements go, so this moved down. Well, actually, I suppose we should take it from here. This move down is in between the 61.8 and the 78.6% retracement. So the Dow is certainly looking like it's in a zone where it can encounter some resistance and start reversing as well. And actually, let me just do a fib pull off this level as well, just to see what we get out of that. And that actually comes in perfectly at the 61.8% retracement. So depending where you do your fib pull, since the Dow's downward wave count is just a little bit different here. But that's also sitting on a nice 618. Seems to be rejecting off of there. So that's positive for bearish potential. And the NASDAQ, quite liking the NASDAQ here for the same reason. So doing a fib pull off this leg down here, we basically, so we also did a doji star as well on the NASDAQ today. Of course, oscillators overbought as well. But I'll just say, so the very top of this doji star, so the top of the upper wick, came in at 73.19.58, and 73.19.71 was the actual exact 61.8% retracement. So just didn't quite nick it, by a few ticks. And then had a doji star and obviously rejected those prices intraday. So potential reversal here. I'm being aggressive. There's no confirmation that it's actually going down yet, but sometimes those aggressive reversal trades have extremely high rewards. And I've obviously accepted the risk in my decision to do this. Okay, and the VIX. So the VIX actually had a little bit of life in it today. And all the VIX really is, I don't think a lot of people explain this very well. The VIX isn't something you directly buy or sell or trade. Now it has futures that are based on certain price mechanisms that you can trade. You can trade the futures. It has options, which are based on the futures prices, which are obviously derived from the actual VIX index itself. But all VIX as an index is itself is just like a graphical representation of a certain formula that the CBOE uses to calculate the implied volatility of a variety of rather short-term options contracts on SPX, okay? So when the implied volatility on a bunch of SPX contracts goes up over a certain period, and there's calculations to this, that number will result in the actual volatility index, VIX, increasing, okay? And then obviously those VIX products, which you can trade, the futures, and there's ETNs and ETFs, and they also just have pricing or, based off of those futures, or hold futures on behalf of the fund, and you're just buying units that represent that, all these things. But But as far as VIX itself, you can't just buy and sell VIX, okay? Just like you can't buy and sell SPX, it's just the actual cash index of the S&P 500. You can't buy or sell it. Now you can trade SPY, okay? And you can also do cash settled options on SPX. So as far as actual SPX itself, it's a theoretical thing. It's not something that you actually trade. So the same goes for the actual VIX. Just thought I'd clear that up because I think there is some ambiguity around that. But anyways, VIX certainly held its higher low above that 1331, and that was seen on March 9th. So I would say VIX certainly looks like it could be ready for a pop, which would coincide, with an SPX drop. I'll say coincide. The two are really related because obviously if SPX starts dropping, that means, you can picture this. A bunch of people start trying to buy protection in the form of puts, okay? Driving up the implied volatility of those puts, and that obviously gets represented as a higher VIX value. That's really all that's going on. Hopefully I've explained that well enough to be easily understood. There's more to it, but just try to give a simple, basic rundown of it. And okay, so interesting to see what happens. Obviously, I'm looking for at least a short-term bearish outcome here, and let's see how the trade plays out. Serial trader signing off.